action.
Hi everyone, Tad Cook and Sam McElroy from At Financial. Just before the midterm elections, thought we might check in and with our comments about the market volatility and interest rates and some other contributing factors to what's going on in the investment world. So interest rates, Sam, what do you think? How is it affecting the market?
Well, I think it's been really interesting because by many accounts, the stock market has really been overvalued to some extent for years now. But I think one of the things that's been causing the market to really stay in an inflated rate is that people felt like they couldn't get a good investment elsewhere. Throughout the course of this year, we saw the 10-year Treasury hit all-time highs, or at least recent highs, a couple of times, and each time it did, it sent a reverberation throughout the stock market. So I would expect that to happen. In fact, there was an article that came out, I think last week, where the Fed basically said that they're intending to push that resistance level. So unless everything just implodes on itself, we should anticipate interest rates to continue rising. Now, for any of you that are already working with us, you know that that's one of the reasons that we use individual securities, individual bonds, preferreds, things like that, so that we have a defense against this rising interest rate. For some of you that maybe have been thinking about making changes, we would encourage you that now is probably a good window of opportunity to make sure you do that, because as many people don't often realize, there's a big difference between bond and bond-like instruments, the individual securities, versus when you're investing in a fund.
Right, absolutely. In all great points, completely agree. I mean, we're at the end of a 10-year cyclical bull run. Interest rates are rising. More money is going into fixed income now instead of into equities because people are sensing they're in for a change. And we would ask, what's the purpose of the money you are saving for? If it's for retirement, you might want to take some risk out of your portfolio at this time. If you're younger and have many years until you're going to be using the money, maybe you could just ride the whole thing out.
Yeah. And lastly, now is the time of year when everybody really ought to start doing year-end planning. So we're encouraging everybody to start working with your financial professional, start making sure that you're talking about things you want to do to address strategies that you can only do within a calendar year. And we're actually going to be doing a couple of workshops on this topic.
We were.
Year-end planning, we'll be doing that in the middle of November. For dates, you can check out the website www.atfinancial-edu.com, and all of the locations and information is available there.
Excellent. Thanks, everyone.